All right, guys, welcome back. This is going to be a new series I'm going to start doing called Sunday Stock Watch. And I'm just going to list out some stocks I'm going to be watching for the week. So, yeah, let's just get into it. So, first thing I'm going to look for, since it's earnings season, so I'm going to look for stocks that probably have some volatility. Because obviously, if a stock is not volatile, you're probably not going to make much money. So, AT&T, I don't really care about. SoFi, I know that has been big the past like 2 or 3 months. So what I do, I'm gonna go on Yahoo Finance and search up the stock, right? And then usually I just look at a chart to see how it's been moving. So over the past month, you can see it's gained 14.65%. Over the past 6 months, over 100% gains. So it looks like a hot stock to watch out for. So after I look at this, I see 10% in the past 5 days. To me, that's too much of a move in too short of a period of time. I think this stock is overpriced, in my personal opinion. But if you're planning on holding it for a couple months, it might be a good investment. But usually, after I look at the chart, I go to the financials and I look at the income statement. So you see the total revenue, and this is in thousands. So you add 3 zeros onto the end of this. So this is going to be 2.4 billion, right? Um, and then you can see the projected earnings. 600. Sorry, wait. Yeah, okay. So so then you go to the projected earnings and you see the revenue forecast is 670 million about, and year to date you have this number right here. But if we go to quarterly, here we can see from last quarter their revenue was about 700 million. So it's actually projected to go less when they report for the first fiscal quarter of the year. Now, after I look at the income statement, that's all I look at in the income statement. I look at the cash flows, and you can see investing cash flow, operating cash flow, and financing cash flow. Now, I look at the operating cash flow, and again, quarterly. So you can see they spend about 1.2 million. Or sorry, I forgot this is in thousands. Or 1.2 billion in in operation expenses, and you can see they invested about 84 million. So to me, the investing is down from last quarter, but the operating expenses are up, right? So to me, I personally think that the business is expanding and or getting more, attention. But after I look at the cash flows, the main thing I'm looking for is the balance sheet, and I look at the debt to equity ratio. So you can see the total assets. This actually, we'll look at it quarterly. Just keep it simple. So last quarter, you could see their total assets were about 34 billion, and the total liabilities are about 28 billion. So you do 34 minus 28, and you get about 6, right? So about 6 billion is their total equity because you have assets minus liabilities. So to me, that's kind of a low debt to equity ratio compared to some other companies. So I'll watch this stock, see how it moves, and then yeah, that's pretty much all I look at. I look at the charts, the income statements, the cash flows, and then the balance sheet. And the only thing I look at the balance sheet is the debt to equity ratio. So, like I said, this is kind of a low debt to equity ratio. It's still positive, so that's still a good sign. But in my personal opinion, for what I look for in a stock, that's kind of low. After I look at the charts and the financials, I go to see if there's any news about the company to increase the volatility or maybe push a bullish or bearish narrative. So 21 hours ago, uh, you can see it's comparing some fintech companies. Now, these I don't really care about, to be honest. I just look at news that's going to push the company. These are just recommendations. Now, we have something here 2 days ago. SoFi gears up for strong Q4, loan growth. And then you have, yeah, that's really all. So this is going to be lower on my list of stocks to watch. So I just do this for every single day of the week. Now I go Tuesday. We got now Tuesday's gonna be a big day. We got Boeing reporting, Starbucks reporting, General Motors reporting, Lockheed Martin reporting, and Raytheon reporting, and JetBlue also. So, and I heard about Stryker, but I'm not really interested in that. All right, so I'm not gonna look at all these. I'm just gonna look at the big cap companies. So yeah, now Boeing's honestly is a pretty stable stock. So in my opinion, I'm not really gonna watch out for this because I'm just not gonna buy into Boeing. It's been moving sideways and can't make much money when a stock is moving sideways. So we're just gonna go into S bucks. I don't know why I said S bucks, but so you could see when Starbucks got the Chipotle, the old Chipotle CEO, I believe that was the what happened here. They jumped, but that's really the only significant move they've had. 13% in a month is very good, but it's it's me personally, it's not enough to go into the stock. So we're gonna move on to General Motors. Actually, General Motors, I don't think that's gonna be very good either. Yeah, they've been moving sideways as well. Lockheed Martin. Now this could be a good this could be good just because of all the political events currently happening, as bad as it is, but seems to have, for most part, we're moving sideways too. We go to quarterly and you can see 17 billion in revenue, and the gross profit was 2 billion, so they made 2 billion last quarter. Now we go to the balance sheet, and you can see they have 55 billion in assets and about 49 billion in liabilities. So the total equity is going to be about 6 billion. Again, this is a fairly low debt to equity ratio for what I look for in a stock, but it is a very big cap company. So I don't think it'll be a bad investment long term. But if we're looking about like weekly or bi-weekly profits, then or sorry, weekly or like bi-monthly profits, then I wouldn't pick this one. So we're gonna keep moving on. Next one is Raytheon. Now I actually own a decent amount of shares in Raytheon. I bought it, I think, I don't remember, maybe a little less than a year ago. But yeah, you can see this has some potential. It's been moving year to date. It's up about 9%, which is pretty good for a long term holding stock, which is why I have it. So you go to the financials then, and you see the income statement, right? So they gross about $4 billion in profit, $20 billion revenue. Go to the cash flow. As you can see, last quarter, their operating cash flow was about 2.5 billion, and they invest about 715 million. So to me, the operating cash flow and the investment cash flow is at a good ratio compared to last quarter as well. So it's about a little cheaper, but overall about the same. So and if you go to the balance sheet, I'll show you guys what I'm looking for. 161 billion in assets, 100 billion in liabilities. Total equity is about 0.6. Or sorry, total equity is about 60 billion. The debt to equity ratio is about like 0.6. So which essentially means the debt to equity ratio is how much. I mean, it's probably self-explanatory. It's how much debt they have compared to how much equity they have, right? So you take the assets and you compare it with the liabilities, and you can see that their equity is more than half of their liabilities. So to me, that's personally something I look for. I want the equity be at least half the liabilities. So this is would be a something to look out for. And what I've seen is when companies report earnings, it's usually the EPS that pushes the stock, not the revenue. So after we look at the chart and the financials, we could look at the news. See here, 7 days ago, 60% year-on-year earnings expansion surpassed the shareholder returns, so that's good. You can see right here, Raytheon clinches a $530 million deal to provide a Patriot missile to the Netherlands. That's something that I'm looking out for. You see, that was big news 10 days ago. So, assuming that they land more deals, I think this could be a good stock to watch. So, we have SoFi and Raytheon so far. And then we go to Wednesday, and this is a big Mag 7 week. Tesla, Microsoft, Meta, and that's pretty much all I'm looking for. And we have IBM too. So we'll go with Tesla first. Now, obviously, we know Tesla is very volatile right now. So I'm not even going to go over the chart since I'm pretty sure we all know what's happening with Tesla. But if we go to the financials, income statement, quarterly, 25 billion last quarter. And out of that 25 billion, 6 billion went into operating cash flow and about 3 billion went into investing expenses. If you look at the balance sheet, this has a very high debt to equity ratio. 112 billion in assets, 45 billion in liabilities. Now, obviously, you can see the total equity is more than 100% of the liabilities. So that's, in my opinion, very good for this stock. So Tesla's something to watch. So we have SoFi, Raytheon, and Tesla. Microsoft up next. So I actually sold off all my Microsoft shares because it's literally moving sideways for the most part since the beginning or since the last year. It's pretty much been moving sideways, so I'm not going to go over Microsoft. Meta. Now, Meta is, in my opinion, a good stock to buy with AI and all that development and stuff. So, yeah, look at the chart. See 30% gain the past 6 months, 8% gain the past month, and all that. So then you look at the income statement. You see quarterly income, 40 billion in revenue, of which 24 billion in operating and about 8.5 billion in investing cash flow. And again, if you look at this debt to equity ratio, 260 billion in assets, 90 billion in liabilities, and the equity is almost double the liability. So this is something very good that I look for in the company. I currently don't own any Meta shares, but I'm thinking of buying some. So we have SoFi, Raytheon, Meta, and Tesla so far. And honestly, you could look at Qualcomm or IBM, but I'm not going to even look at those, to be honest. Yeah, I'm not going to look at Qualcomm. IBM is kind of dead also. Actually, I just realized we didn't look at the news for Meta. If we go to news, here we have this artificial intelligence. Actually, I don't think that's Meta, but uh, Here we go. Mark Zuckerberg's $65 billion AI benefits from Nvidia and other players. So we see Meta as a big player in AI investments. Obviously, that's hot right now. So I would keep an eye on Meta. That's pretty much all I'm looking for. And we have Apple and Intel. That's all I'm going to look for on Tuesday. Apple, I currently do own some shares of Apple. It hasn't been doing too well this year, but overall, if you look at the news, not much news on Apple, but if we go to the financials, obviously it's one of the biggest players in the world. You can see quarterly revenue, about 95 billion. Cash flows, about 26 billion into operating and only 1.5 billion into investing. Now, this again, Apple doesn't have that great of a debt to equity ratio, in my opinion, where you have 330 billion assets, 260 billion in liabilities. The total equity is about 20% or less of the liabilities. So, in my opinion, that's not good. So, I'm not even going to watch Apple. I do own some shares, but that's for long term. And then the next one we have is Intel. Obviously, we know the whole thing that happened with the CEO. You can see right here, plummeted. Do you have any news on Intel? So we have some competition in the semiconductor sector. So it could be something to watch. I'm not gonna lie. Financials. 13 billion last quarter. Wow, okay. So you got 11.5, never mind, 4 billion into operating cash flow and 3 billion into investing. And if you go to the balance sheet, 200 billion compared to 90 billion liabilities, and you can see the equity is more than 100% the liabilities, so that's something I look for. So Intel, probably keep an eye on, but it hasn't really been moving much, not very volatile. So I don't think I'll look at it much more. And the only thing I'm going to look at Friday is Exxon. Obviously, Trump has just announced, he wants to drill more, but Exxon's moving sideways. It's kind of stable stock, but, earnings can never hurt. If you look at any news they might have just had. Mm-mm-mm. You can see Chevron sees 1 million barrels per day from one of the world's biggest oil fields in OPEC. Now, obviously, Chevron is a different company, but Exxon could also, it's within the same sector. Usually, from based on what I've seen, at least in the tech sector, if one company, like if the whole AI sector is doing good, usually most of the AI stocks will go along with that. So something to watch. See, Trump wants to lower oil prices. Yeah, it's a very steady stock, so not much volatility. Good for long term, but not if you want to make a quick profit. Although quarterly, it is making some good money, 17.5 billion. Last quarter, it made almost 90 billion in revenue. Look on the balance sheet, 460 billion assets, 180 billion in liabilities, and you can see that the equity ratio is almost double. Actually, not almost double, but just compare it. You guys can see. I don't even have to explain this. 180 billion in liabilities compared to 270 billion in equity. That's something that I watch out for. Very good, over 100%. But yeah, that's pretty much all. So the ones I'm looking out for this week is going to be, hold on. It's going to be SoFi, Raytheon, Tesla, Meta, and that's about it, to be honest. SoFi, Raytheon, Tesla, and Meta. And actually, I think there was one more that I mentioned. Boeing, maybe? I think it was Boeing. So SoFi, Raytheon, Tesla, Meta, and Boeing. Those are going to be the stocks I'm watching this week. Now, I'll update you guys again next week because we have some more earnings next week. But yeah, that's essentially how I pick my stocks for the week. So I hope you guys, enjoyed something, learned something, got something from this video. But yeah, I'll put another one Sunday.